Welcome to Richie Shot.
Markets are buzzing this week. From copper hitting fresh highs to Intel's stunning rebound, IMF warnings on growth, and Robinhood's bold tokenization vision. Add in the Singapore Grand Prix tourism boom, and we've got plenty to cover. Let's dive into today's top stories. Copper breaks $10,500. Red metal surges on supply crunch and rate tailwinds. Copper is shining bright on the global stage, hitting levels not seen in more than a year as investors cheer a mix of supply shocks and lower borrowing costs. On the London Metal Exchange, futures surged past $10,500 per ton for the first time since May 2024, a milestone that has traders buzzing with optimism. The rally got an extra push when Freeport-McMoRan, one of the world's biggest producers, declared force majeure at its massive Grasberg mine in Indonesia. This disruption adds to a series of global supply constraints that have tightened the market and made copper, already known as Dr. Copper for its role in diagnosing the health of the economy, even more valuable. At the same time, lower interest rates are acting as fuel for commodities across the board. Cheaper money boosts consumption, while a weaker dollar makes metals more affordable for buyers outside the U.S. Bloomberg's dollar index just logged its fifth straight day of declines, a perfect tailwind for copper demand. With infrastructure build-outs, green energy projects, and electrification trends all leaning heavily on copper, this red metal is once again proving why it's the heartbeat of modern industry. IMF flags signs of slowing growth, highlights mixed inflation picture. The International Monetary Fund, IMF, has warned that the global economy is beginning to show early signs of slowing momentum, even as it demonstrates resilience in a climate of ongoing uncertainty. IMF spokesperson Julie Kozak, speaking at a press briefing, noted that growth was stable in the first half of the year, but that we are now starting to see signs of a global slowdown. On inflation, Kozak described the picture as mixed. She highlighted stronger than expected headline inflation in countries like the UK, Australia, and India, while in the United States, new tariffs are beginning to filter into core prices. Meanwhile, inflation pressures remain relatively subdued in China and several other Asian economies, creating a patchwork outlook across regions. Kozak explained that tariff hikes can act as a supply shock in the countries imposing them, while functioning more as a demand shock elsewhere, which can have inflation-dampening effects. She added that many firms have absorbed part of the tariff impact, which has helped limit inflationary pressures in the U.S., though she cautioned that this might not last indefinitely. On monetary policy, she reaffirmed the IMF's view that the U.S. Federal Reserve has appropriately lowered interest rates, while emphasizing the importance of independent yet accountable central banks to maintain credibility and stability. Singapore Grand Prix spurs regional travel boom. The Singapore Grand Prix isn't just a spectacle on the Marina Bay track. It's also fueling a surge of regional tourism, with luxury hotel suites priced at $62,000 and race packages hitting six figures. The three-day event is a massive windfall for local businesses. But the economic ripple doesn't stop at Singapore's borders. Data from Sojourn shows that racegoers are turning the Formula One weekend into multi-stop Asian adventures. Among travelers with onward trips, a quarter of Americans and Canadians are heading to Japan, while 18% of Europeans are extending their journeys to Thailand. Nearly one-third of Australians are making a beeline for Indonesia, overwhelmingly Bali. Others are pairing the night race with visits to China, South Korea, India, the Maldives, and Fiji. As NUS lecturer Samer Elajar notes, travel platforms abroad are now bundling race tickets with Southeast Asian island getaways, amplifying the Grand Prix's reach. Robinhood's Vlad Tenev, tokenization will transform global finance. Robinhood CEO Vlad Tenev has a bold vision for the future of finance: tokenization. Speaking at a crypto conference in Singapore, he described the shift as a freight train, that cannot be stopped and will eventually eat the entire financial system. According to Tenev, most major markets will have tokenization frameworks within the next 5 years, though full adoption could take more than a decade. Tokenization refers to converting real-world assets, such as stocks, bonds, commodities, or real estate, into digital tokens recorded on a blockchain. This innovation makes ownership more flexible, borderless, and transparent, while lowering barriers for global investors. Robinhood is already putting the concept into action. In June, the company launched more than 200 tokenized U.S. stocks for customers in the European Union. The rollout sparked strong demand and helped send Robinhood's own shares to record highs. Tenev believes tokenized assets will become the default way to gain exposure to U.S. equities outside the United States. Still, he emphasized that licensing and regulatory clarity will be crucial before tokenization can scale globally. Once that framework is in place, he argues, tokenization could unlock trillions of dollars in liquidity and redefine how markets work. Intel surges 50% in a month as government and industry giants back revival. Intel's rebound is gathering serious momentum. Shares of the U.S. chipmaker climbed another 3% on Thursday, lifting monthly gains to more than 50% and pushing the stock above $37, the highest level in 18 months. The rally has also boosted the value of the U.S. government's 10% stake in Intel to roughly $16 billion. The Trump administration purchased 433 million shares in August at $20.47 each, a move funded through grants previously tied to the CHIPS and Science Act. Intel has already received $2.2 billion in grants, with another $5.7 billion on the way, plus $3.2 billion from a separate program. President Trump's focus on U.S. chip manufacturing is driving historic investments in a vital industry, CEO Lip Bhutan said. Intel's revival isn't just about Washington. SoftBank has invested, and NVIDIA recently pledged $5 billion as part of a new collaboration to co-develop data center and PC products. The support has given fresh confidence to a company that endured its worst year on record in 2024, with shares plunging 60% and longtime CEO Pat Gelsinger stepping down. Now, under Bhutan's leadership, Intel's turnaround is accelerating, and talks with AMD could push the comeback even further.